We're seeing continued pressure when it comes to investment banking teams, not just at JPMorgan, of course.
Absolutely, and this example here does seem to be affecting the junior level ranks at JPMorgan. That much seems clear. And of course, 20 is not a huge number, but incrementally, as you allude to, Heidi, it's part of an ongoing process that many investment banks, of course, are facing, having to shrink down teams in specific areas, especially because of some of the headwinds that are facing the industry and that are growing. You know, the decline that we've seen in M&A transactions, the decline in many of the investment banking business kind of transactional volume just means that they need less people to handle these. Of course, it speaks to a far tougher climate as we go into the second half of this year, and no signs of a recovery there in terms of some of these businesses coming back. But of course, if we do come out and activity grows again, of course, there are some areas of these businesses that are going to look a little slim. But clearly, it's another example of banks wanting to slim down in these areas so that they're fit for purpose going into a slowing economic environment.
You would have thought, particularly if they're at the more junior level, that banks would want to retain talent, Adam. Does it indicate that banks really have absolutely no confidence as to deal making for the second half of this year and into next year?
Well, indeed, Vonnie, and of course, at the junior level ranks, generally they would be cheaper from a salary and overall compensation costs, of course. But I think it does mean that there is a large degree of caution around how the economy and the areas of these banking businesses, how that plays out in the second half of this year. Of course, there's kind of a lot of debate still around what the level of interest rates will be, whether the Fed will have to kind of continue on its hiking path, or whether it will have to make another couple of moves and then move into an aggressive cutting cycle. And of course, banks cannot wait for those things to play out. They have to get ahead of that, and that's what we've seen for the best part of 12 months now, where a lot of these moves started in the second half of last year across Wall Street. Really, investment banks wanting to scale down particular areas that were going to be hit, and indeed areas like M&A certainly show no signs of improvement just yet.